7:42, 18 moving up to 8 o'clock. Welcome back to First Step right here on CTV. In this segment, we welcome our friends from the UTC, the Unit Trust Corporation. We're talking about stocks and thinking about stocks. Our guests are financial risk analyst Kerron Blandin and also portfolio manager Mr. Philip Williams. Guys, good morning. Thanks for joining us this morning. So I have some very basic questions because this confused me for a while before we started having these meetings with you, these conversations with you. What is a stock? And what are the different types of stock there?
Well, good morning, Paul. Thank you very much for having us. Good morning to the general public and our unit holders. A stock is a portion of ownership of a company. Now, companies have different ways of raising capital to expand their businesses. And so they can raise capital through loans, they can raise capital through bonds, which are basically loans, and they can raise capital through issuance of stock. And in the unit trust, we have products that give you exposure to stocks like the Growth and Income Fund, the North American Fund, the Universal Retirement Fund. And what stocks give the investor is, as I said, ownership of the company, part ownership of the company, and it also gives them voting rights where the company is concerned. It gives them an entitlement to a portion of the success of that company. And that entitlement, that success comes through two ways. You have dividend payments, which are payments decided on by the board of directors out of the profits of the company to the shareholders. So the better the company does, the more your dividend, the bigger your dividend is. Generally, yes. And also you have capital appreciation. As you know, stocks are traded on exchanges. And on any given day, the price of the stock is determined by supply and demand factors and what investors as a whole view the stock or deem the stock to be worth on that given day. And how similar stocks are performing. Yes, that influences the dynamic, basically. And so at the end of the day, if you purchased a stock at, say, $10, and a few years later, maybe the stock was valued on another day at $11, then you've experienced what we call capital appreciation, where the value of your investment has grown. Of course, there's the flip side of that where, you know, it's possible that the price of the stock may go down, and that is a part of the risk that you take when you enter into stocks. But there are ways of mitigating that risk. Would it be correct to say, Philip, that stocks are the next evolutionary stage in terms of saving and investment, just past saving?
Most certainly. I think, you know, the way to think about it, right, Paul, there are three ways that you can accumulate wealth, right? That is one, running a successful business. Two, today is your lucky day and your numbers came up and you won the lottery. Or three, investing in stocks and investing, or you inherit. But daddy would have worked very hard for you to get that inheritance, right? So investing in stocks has everything to do with securing your financial well-being and achieving long-term goals, right? All of us, well, some of us, most of us may have goals, either send a child to university, start a business, purchase a home, and stocks puts you on that path to achieving that long-term goal. Now, a word of caution, Kerron mentioned risk. So what we would recommend, if you haven't started, you start as soon as possible, early in your career where you have much more paychecks. Because what you don't want is later on, you have less paychecks, right? That is the time when you want to be preserving your capital. That is the time when, well, hopefully you would have achieved your long-term goals and you don't want to have too much exposure to risk. So you stay invested in equity, but that is when you start reducing that type of exposure. So the two pertinent points, right? This is what stocks can do for you. You have an opportunity to take advantage of economic prosperity. Once an economy is expanding, it therefore means that earnings are increasing, corporations are going to do well because, you know, consumers are feeling that much more confident. In addition to which, the goals that you're saving for, cost of living, it goes up. And this is what we know as inflation. And what you want to do is to be able to stay, at least keep pace or beat inflation, and that is what stocks can do for you. So this is basically in addition or just past evolutionary in terms of putting your money to work for you. Exactly. That's basically what you're doing with stocks. Exactly. How do you determine as a novice, because I think the idea of stocks is pretty new to most of us in Trinidad and Tobago, and investing in stocks, well, the ordinary folk anyway, the people who have money kind of, they have a clear understanding of the stock market. How does the stock market work on a daily basis? Let me get down to that. In terms of assessing
what stocks are doing well and making that information public?
Well, as Philip mentioned,
as simply as you can put it for us.
Well, the reality is that the stock exchange is open 5 days a week. It involves, as I said, the trading of stocks, and it's the prices on any given day of the stock of the stocks are determined by the movement in terms of purchases and sales, supply and demand basically, and that determines exactly what the value of any share is on any given day. If you want to participate in the trading, you can go to a stockbroker, open an account, and you can give that stockbroker instructions. Of course, you'll have to pay a commission for those the trading, but at the end of the day, if you are going to do that, we suggest that you have a certain amount of due diligence that you put into whether this stock is a good investment or not. In other words, you shouldn't be investing in something based on, well, my friend tell me that, and he work in the bank and he knows.
And get one of the professionals to help you.
Yes,
because it's a skill base that not everyone has, but that doesn't mean you should absolve yourself from your involvement in your stock purchases and monitoring of them.
Yes, and of course the unit trust provides mutual funds which offer you the opportunity to invest in stocks with the expert advice of the unit trust, as in the expert management. We have tons of access to a lot of information, global information from some of the best investment houses, and we are able to make informed decisions on your behalf. So investing in mutual funds, you have the advantage of having expert managers work for you.
Why is it called a mutual fund, Philip? And what are the other options available in terms of stock investment?
They are ETFs. I mean, another way to invest is via an ETF. And an ETF is similar to a mutual fund, but the difference there, the cost is less in terms of, Kerron mentioned, brokerage fees. There's not active management, so there's no manager there. Versus, you're going to a mutual fund, somebody is actually making those decisions, somebody's looking at economic data, seeing which sectors, how the economic data is going to trickle into various industries, what industries are tipped to do well, and then what companies in those industries. So somebody has to be paid to do that, and that's what that's the difference between a mutual fund and an ETF. Or you can take a direct position, as Kerron is saying, which is not what we would recommend, because it's a lot of legwork. Granted, there is a lot of learning there. Because to assess a company, you have to understand what the financials are saying. You have to have the time to monitor investments on a daily basis, because data comes out every single day. Our stock price moves, it fluctuates on a daily basis. And if you cannot do that, then you need to rely on the professionals that would do that on your behalf.
What are the sectors that people should be looking at in terms of stock? One that jumps at is tech. We recently had the IPO. We won't call the name. That was pretty lucrative, more lucrative for some than others, obviously. Yes. But how important is a potential investor or even a current investor in stocks keeping an eye on those kinds of developments? This is coming up, that is coming up, and what the market is saying regarding those stocks, especially in the context of the history of these companies and these IPOs for your possible investment.
Okay, well, generally, when you're talking sectors, generally we tend to talk about international market sectors and not so much local market sectors. At the moment, the IMF is projecting growth globally, and it's projecting that the US will drive that growth. And so when you have economic growth, that is very likely to trickle down into the pockets of the companies that can benefit from that growth. So companies in the tech sector definitely can benefit. Companies in the consumer discretionary sector, for example, may benefit from that. So companies in any sector that will benefit generally from economic growth are probably going to perform. So those sectors, as I said, tech, consumer discretionary may do well. On the other hand, you have other things like the interest rate environment. At the moment, rates are rising and expected to continue to rise. And that may negatively affect companies, say in the utilities sector. Some home builders may be negatively affected by that. And so those things are things that you need to monitor. But again, it comes down to your ability to do the due diligence, your access to information, those things. Whereas at the unit trust, we have access to all that information. We're on top of things, and so we're always looking at the markets and looking at which sectors we should be in, which ones we should avoid right now, that sort of thing.
How important is it, Philip, to diversify your portfolio?
It's actually extremely important, Paul, because essentially what you're doing if you take one position is you're putting yourself at risk versus coming to the Unit Trust Corporation, where we spread the investment over a series of companies. So, and even speaking about diversification, we spoke about sectors. You want to be able to diversify over sectors. You also want to be able to diversify geographically. Because if someone said, okay, fine, I can understand someone saying, I feel comfortable investing in our local market. I can see the buildings, I can touch them, I feel that's much more tangible, right? But what you are saying, when you limit yourself, Kerron indicated that growth, the U.S. is expected to drive global growth. So if you say, I would limit myself to Trinidad, what you are exactly saying is I am prepared to forego that upside and not have the opportunity to invest in some of the most dynamic and innovative companies. So diversification is fundamental. And even thinking about it, yes, I know, because you asked to simplify it. Kerron spoke about these sectors. So just to give you an example, there was a weather-related slowdown in the States, but that is not representative of the fundamentals and where the economy is going. So as a result of that, utility sector has been the top performer this year. People have to, the house has to be warm. Yeah. Right? The consumer, on the other hand, was affected most. So the consumer discretionary sector, that has been the worst performer, actually in negative territory. Yeah. What am I going to do if there's snow outside? I'm not going to go out. I'm not going to buy a car. I'm not going to do that. Right?
But I can shop online.
Yeah. But I may not be my investor sentiment if I'm looking at that data. If I feel as though, you know what, maybe the economy is not where it's supposed to be, maybe today is not that day for me to make that purchase, and that is it all boils down to the psyche of the investor sentiment and how confident they are to move in.
Well, good guidance is also
yes,
Let's talk about local, domestic versus international investment and how an investor should balance that sort of diversified portfolio.
Well, as Philip had mentioned, people generally feel more comfortable investing in local stocks because you feel more of a connection to the companies.
I feel very connected to Apple. Connected to Apple and Samsung.
But the reality is that diversification is important, as he said. It is important because sometimes the local market may not be performing as well as one might expect, and so it's important to have uncorrelated assets in your portfolio, and the international markets generally are uncorrelated to the local market. So it's very, very good that you have different types of assets in your portfolio, that in the event that one is not performing so well, the other one may be performing well. And it's important to get that exposure to international stocks. It's difficult because you have to open an international brokerage account. It costs a lot of money, of course, because now you're dealing in US dollars.
And the competition is much steeper.
Correct. And you mentioned Apple and Samsung. People like those companies, Google and stuff. But one stock unit can run you, say, $500-700 US. So that's just one stock unit. Wow. So, I mean, you are talking about a significant capital outlay there, and we're talking again US dollars.
With that said, I have 1 minute. I don't know your answers in 1 minute. How important is timing?
Timing is important, but you have to think about it in this way. Prices go up, prices go down, but what you want to do is catch that asset when it's now rising. Yeah. And a mistake people make is they say, well, look, oh my goodness, the price has declined. That may actually be the best opportunity for you to enter, right? This is what we do at the Unit Trust Corporation. We provide that access to you with diversification by the Growth and Income Fund, which I wish to point out that has been the top performing fund in its amongst its competitors. That was noted in the Business Guardian with a return of 10%. Our North American fund, which is predominantly invested in companies in North America, 1.95%, and the Universal Retirement Fund. So timing is important. You rely on the managers if you don't have that, the skill set.
You have to come back for a continued conversation on stocks. We've only scratched the surface. Gentlemen, thanks for being with us. We're talking to Kerron Blandin and Philip Williams, both of the UTC, the Unit Trust Corporation. We're going to go out with some shots of the changing of the guard. I don't know how those guys do that, but much props to them. They stand guarding and they take shifts, basically guarding the body of the president at the Waterfront Complex lobby. Thank you so much for joining us this morning. Don't forget, our comprehensive coverage continues all the way through to Saturday on behalf of the entire team. And Paul Richards, have a great day.